And the utility sector, usually so sleepy, is up 11% so far this year. But is there still more room to run? And should you own utilities in your portfolio? Joining us now is James Key. He's president of South Texas Money Management. Mr. Key, utilities at, I think, all-time highs earlier today, certainly multi-year highs. Is their run the best part of it behind them? Can they keep moving up?
Well, I think the right way to look at valuation on utilities is probably their dividend yield compared with other alternatives like 10-year treasuries. Utilities are kind of a bond-like stock. But the way to think about it, I think it's instructive to look at, they were the strongest sector this first quarter, and who thought that at the beginning? Probably nobody. At our firm, at South Texas Money Management, our view is these momentum stocks like the biotechs we saw recently and utilities are forever trading off alternating places. Rather than trying to outsmart the market by getting in and out and trying to figure out when they're over or undervalued, our view is to take advantage of the natural diversification and own both. Always own some utilities, always own some of all sector in your portfolio, and this is a great example of why that works. We tilted a little bit more into utilities after the first months when we started to see some of the momentum stocks shift.
But Jim, let me pick up on what you just said. You said it's like utilities are like a bond-like stock. And, we hear from so many other market strategists, rotate out of bonds, given that all the uncertainty about where interest rates are going. So how do you know as an investor whether you should be in these utilities, or is it time to, slowly get out of them now that the economy is picking up a bit?
Well, you're still going to want to own bonds. Even with rising interest rates, it's important to have, we think, own individual bonds, pretty short maturities, so you can, in a ladder, so you can reinvest as those rates rise. But utilities are going to dampen the equity part of your portfolio. They're very defensive. They're very low volatility. So within stocks, utilities are automatically going to offset some of the declines in some of the higher beta stocks, some of the momentum and growth stocks.
All right, so let's name some names here. I gather, though, that you are a believer that the best way to get into utilities is through ETFs. Why and which one?
That's right. We usually like individual stocks, but the utility sector is very unique in that it's very regulated. The returns are basically held to the cost of capital, the ROI. So there's not that much difference in corporate performance. So it doesn't really reward putting a lot of time into company analysis and security selection. So we argue, own the group, buy a low-cost ETF. We use State Street's Spider UTX, but it's important to just make sure you have a place in your portfolio, a weighting of utilities at least consistent with the market's weightings at all time. Right now, utilities are about 3.5% of the market.
All right.
All right, James, thank you very much. We appreciate that.
Sure.
James Key with South Texas Money Management from San Antonio tonight.